is your March mortgage real estate update. So today we're going to be talking about what's up with rates, do we have a spring market, and Biden, President Biden, the initiatives he was talking about, when will you as a home buyer get to take advantage of all that great stuff he spoke about. Now, first of all, if you're new to the channel, I am a mortgage lender licensed in 48 states. Everything I talk about is what I'm seeing in the market as well as with rates. So let's start with mortgage rates, because usually that's what everyone wants to hear about. They improved this month. They actually improved this month. So from February to now, they are better. We had seen them going up in the beginning of the year, and then Jerome Powell came out recently and said he still thought they would be lowering rates later this year. So we saw a dip, but then we saw an inflation report and they came up a little bit. So still lower than February, okay? We had a couple really nice days, but then the inflation report came out and ruined it, as it has all year. So what does that mean for you as a buyer? Well, it means that if rates dip when you're in contract and the lender wants to lock, you definitely should. Because I will tell you, when we saw that dip, I was working the entire weekend calling every single person who was getting into contract saying, I want to lock. I do not want to wait till Monday. I do not want to wait till Monday. And thank goodness, because by Tuesday morning, we were already seeing rates go up. And that's what you need to know as a buyer. The market is stupid volatile still. We haven't actually seen the Fed decrease rates. Everything in the market is moving off of data and then interpretations of what they think other people are going to do. Seriously. So it's a very volatile market. So just realize until your rate is locked, it doesn't mean anything. So if you had a rate quote a couple weeks ago and you're about to write an offer on a house, definitely check in with your lender to make sure that rates are where you expect them to be. Okay, let's talk about spring. Do we have a spring market? Yeah, I would argue that this year I think is a lot hotter than last year when I think about the spring market. I felt like last year we were waiting for the spring market to hit. We were like, are you coming? Are you coming? And it just didn't. Whereas this year, we're definitely seeing a traditional spring market in terms of buyer interest. So what I mean by that is I'm seeing a lot of interest from buyers. We're seeing lots of applications for pre-approvals, all that good stuff that you would expect in this time period. It's usually when the mortgage market starts to pick up. I'm not seeing as much inventory as I would like personally in a lot of the country. Now, let me be very clear on this. Anything you read that's making a generalization about the market, it's wrong. And it's because every single, I can have a state where one county, there's multiple offers on everything and people are paying over and it's just craziness. Whereas a couple counties over, you have your pick of houses. I have some states where it's just brutal. It's just brutal, and other states where it's still reasonable. Inventory is starting to pick up. Buyers are having choices of house. So it's really going to be based on the individual market you're in. So if you're like, well, the newspaper says or Reddit says, you need to look at your local market. And I don't mean your state. I mean like your county, okay? And then I mean within that county, your price point, because what we'll see sometimes is we'll see like maybe it's really competitive, 200 to 400,000, but once you break over 425, 450, there's less competition, or in states where there's a higher cost in general, like I think of places in Virginia, I'm seeing just stupid crazy competition between the 1 and the 1.2 range, but then above that, less competition, right? Then you have states like Florida where you may see more competition at a much higher than you do at a lower. It's all over the map, and that's what you guys need to know. So please do not pay attention to any generalizations. Look at your individual market. Now, I'm sure some people are going, okay, well, Jen, you're saying there's a lot of buyers, but not a ton of inventory. What does that mean for me as a buyer? It's going to depend on the market. So, Dallas, Houston, I'm still seeing buyers have fun there. I'm seeing my buyers where they're like, I've got 3 houses to choose from. And I'm like, oh my God, that's great. Whereas other places I'm looking at maps with clients and I'm like, wow, there's 1 house for sale, like 1, So really dependent on that. I wouldn't, because sometimes I'll hear, should I wait for rates to get lower? No, guys, I'm telling you right now, with rates where they are, we're seeing competition, in most parts of the country. So once rates go down, it's just going to get worse. Which brings me to President Biden and the State of the Union speaking about some of his hopes. And I'm going to say hopes, guys, for housing, right? Because I'm already getting the calls, hey, Jen, how do I get that $10,000 tax credit? I don't know, it's not real yet. And that's what you guys need to know. None of this is real yet. We saw this a couple years ago where it was, I'm going to do this for housing. We're going to give away $25,000. It didn't happen. It didn't happen. So I'm not saying this won't happen. I don't know. They've got to put it all together. It has to get approved. There's a whole process that has to occur before any of this becomes reality. And it could get killed before it ever becomes reality. So it's important for you guys to know none of this is real yet. The minute it's real, we will all be talking about it. I know everyone's talking about it already. I wasn't going to, but I've got so many people asking for the tax credit. I was like, I better make sure everyone knows that this stuff is not real yet. It's not passed. It's part of a speech, okay? And that's kind of what I think we're going to be seeing over the next 6-7 months. We're going to see a lot of politicians promising to fix housing, promising to get you guys in the door. Until it becomes something real, I wouldn't put much weight on it. And, here's why. A $10,000 tax credit sounds great. Cool. But it doesn't remove one of the biggest problems that everyone's facing right now, and that's competition from corporate buyers. And sometimes I'll hear people, they'll be like, oh, they don't buy that many. Guys, in certain parts of the country, they do. Look at the percentage of homes owned by corporations in Atlanta, Georgia. There are parts of the country that just got bought up by corporate buyers, and I felt like they were taking a little bit of a break, but I'm noticing them back now. So, there is a bill that was introduced in December to stop hedge funds from buying single-family homes, but it's just sitting there. Nothing's happened. It's not passed, and honestly, it's unlikely to pass. And the reason it's unlikely to pass is it doesn't just say, hey, you can't buy this anymore. Instead, it says, hey, you have to sell everything that you legally bought over 10 years. And I think that's the problem. The problem is when you're telling someone to sell something that at the time was legal for them to buy. So I'm hopeful that a bill will be introduced that just bans the practice of corporations buying single-family homes, period. Okay? That would be great. And I'm sure someone's going to be like, well, I'm a mom and pop investor and I have a very small corporation. Guys, I'm sure there'll be some sort of limit where it's like a single corporation can't own more than XYZ, but at the same point, they would have to make sure that the corporations are not mini corporations, right? Because we all know that trick. Oh, well then we'll just set up 60 under this big umbrella. So there would be some sort of legislation on it, but that's something that needs to change. The other thing that would help housing be more affordable is if they removed some of the pricing hits. And by pricing hit, I'm talking about something that makes the interest rate higher. It makes the cost of getting a loan higher that were introduced 2 years ago. We saw huge pricing hits on a segment of the mortgage market called conforming high balance. So that's in those high cost areas, LA, New York, San Francisco, those really high cost areas. If you're above the conforming loan limit, there's a premium added on and it's fat. Let's get rid of that. Let's get rid of a lot of the adjusters that, there's an adjuster if you're buying a condo. Yeah, if you're buying a condo, your rate's higher just because it's a condo. Manufactured housing, same thing. And people go, well, the government doesn't control that. Well, here's the thing. Fannie Mae and Freddie Mac are actually under the government's governance. They're not public companies. The government still controls them and financially benefits from them. And FHFA is very involved. And that is what we need to look at because that's one of the things making rates really high or making the cost to get in a house with points very expensive. So, we'll see what happens, but I agree. I think that the cost of getting a loan in many cases is very expensive. I think that as a buyer, you do need to be watching out right now. I've been talking about this for months. We kept on thinking that with the mortgage market slowing down, we'd get rid of some of the predatory lenders, and we did. We lost a lot of good ones, but we also have some super predators. So they're still around. So definitely make sure that you guys are, comparing what you're getting with your interest rate and the lender fees. Have your eyes wide open, educate yourself as much as possible. Watch out for Google ads. I love Google, nothing against them, but recently I had a client where I saw the loan estimate and I almost fell out of my chair. I was like, wow, this is insane. Like, he was getting ripped off. How did you find them? Well, I typed in XYZ and this ad came up. So really be aware of that. Watch out for the stuff on TikTok and Instagram that seems too good to be true. But overall, I'm hoping for some more inventory. I think that if rates go down, we will get some of those people that have been miserable in their houses and want to sell, but their rate's too good. And I think if we get the inventory, that would help. I think if we could stop corporations buying single family homes, that would help. I think if we could get wages increased, that would help. But that's kind of my dream list. So overall, March, rates are better. Still not enough inventory. People are excited about buying a house. The President Biden stuff is not real yet, so don't, place your bets on it, and we'll just see what happens next. Thanks for watching.